Okay, we got to talk about NIO. Tom Lee has said some very interesting things about the Chinese economy and the stimulus that's getting ready to happen, or it's actually already in progress right now, and how it affects NIO. If you're a NIO investor or you're looking to put money into NIO, this video is very important. Guys, don't worry about smashing a like button, clicking the links to go to the Discord and join the program. Not yet. We'll talk about that in just a little bit. Just sit back and listen very closely to Tom Lee, and I'll break it down for you.
Our stance at Fundstrat is to treat it like a real move. So we did a webinar yesterday for our clients, and Mark Newton really pointed out this is actually a pretty significant breakout because we've moved to levels that you would expect a much bigger retracement. And he was talking about how many of these stocks then kind of approach multi-year highs. So
Chinese internet stocks, I'm guessing?
Yeah, like KWeb or
Holdings.
FXI. And but it sort of fundamentally makes sense because, you know, at the end of the day, China is trying to restore consumer confidence through a channel, and actually equity markets is one because real estate would be very tough to stimulate here. But
not now, right?
Yes.
Okay.
So there could be a very self-reinforcing cycle because we know there's also a lot of savings in China.
So the Chinese stock market has lost $6 trillion since 2021. It's the worst of the large economies coming out of COVID, coming out of the pandemic. It's really a situation where you had a stock market that's like 9 or 10 times earnings. Some of these companies have 20% of their market cap sitting in cash. Then the Chinese government comes out and says, not only are we cutting rates, we're cutting mortgage rates. We're cutting restrictions. We're cutting regulation.
It's maybe to restore a sense of capitalism and risk-taking and initiative.
Do you think it's going to work?
I think that we won't know, but in the meantime, it's a little bit like in Europe when Draghi said whatever it takes.
Yeah, that was a pretty big moment.
You should be a little fire-ready aim just because if you're lucky and it retraces towards its all-time highs, it's a huge move. So I think it's a good calculated risk. You know what? If I made a measurement gap between like perception of macro versus like logically macro, it's a huge gap because I think many people think this is an extended rally, an expensive market, and a business cycle that's late cycle. But so much of what you can point to is early cycle. What happened is the Fed signaled to the business world in 2022 that there's a hurricane coming.
Yeah.
And so I think businesses got cautious, and the really ones with plentiful cash weathered the storm well. Small caps really got destroyed because of the cost of money. As you know, there's obsolescence. So 5% of capital stock depletes. Even tower companies, 5% of towers fall. So there's been deferred expansion. And that's why hiring is stronger because when you defer capital spending, you actually have more employment. I think it's going to be very expansionary, but obviously biggest beneficiary should be small caps because they got hit the hardest.
Well, you guys heard what Tom Lee said about the stock market in China. FXI, which is the top stocks in China listed in London, has a 61% short interest. This pretty much alone in its own right is really good for stocks like Alibaba, BYD, Li Auto, NIO. And the reason is because the shorts are going to have to cover. And when that happens, there's going to be a lot of buying. And if the stock prices just keep going up and NIO stays above $6.50 or $7, Alibaba stays above $100, we're going to see at some point the cover begin. Once investors, traders start covering their positions, then the stocks are going to fly. This has already started happening, which is potentially the reason for all the gaps on Alibaba and the very small gaps on NIO. What happens is basically investors short the stock, they sell it, and as the price drops, they buy it back cheaper. But if they sell it at $7 and it goes to $7.50, $7.75, $8, $8.50, well, then they all start to buy, which causes the stock to surge and gap. That happened quite a bit on Alibaba, not as much on NIO, though. I believe that if the prices stay where they're at now and start to go up even more slowly, we're going to see some covering happen, which is going to cause the stocks to surge upwards. Another thing, in addition to what Tom Lee said, is the Chinese economy has suffered a $6 trillion loss since 2021. Most of the Chinese stocks are trading at 10 times their earnings, and they're trading at multi-decade lows. The Chinese government is creating a stimulus for Chinese stocks and the Chinese economy by cutting the RRR, or the triple R, by 50 basis points. RRR stands for Reserved Requirement Ratio. They're cutting this by 50 basis points. They're also cutting regulations, mortgage rate, credit card rates, interest rates for loans, and they're also cutting restrictions. China is reshaping its risk-taking and initiative. They want to encourage spending and encourage people to invest in Chinese stocks. They want people to understand that the Chinese stocks are strong. They want people to believe that. They want them to see that. They do not want to be in the position that they're in anymore. And the Chinese government is trying to encourage spending, taking out loans, buying houses, cars, investing. They're trying to stimulate the economy, hence a stimulus. So this is really a good time because, like Tom Lee also said, small caps took a beating. And because of this particular instance, I believe that NIO will benefit the most. The stimulus in China, because of the fact that the economy around the world overall is getting better, especially the dovish one here stateside. But with the stimulus happening in China, if we don't see any issues with China and Taiwan and the Ukrainian and Russian issues, and things in the Middle East don't get any worse and maybe even potentially get better over the coming weeks, once we get to the election and everything becomes a little bit more bullish because of the uncertainty of the election, that is, when things, like I said, become a little bit more certain, we know who's going to be in the White House, PMI data continues to get better, unemployment continues to go down, jobs added continues to go up, and things like this just continue to get better as we get near the end of the year. NIO, I believe, will run with a good stimulated economy in China. And that's basically what Tom Lee was saying. China is trying to stimulate the economy. They are now issuing rate cuts just like the United States. There's a lot of uncertainty with the elections. Investors around the world are very cautious about investing when there's elections. I know it's more predominantly in the United States, but around the world, there is still caution during our elections, which is going to put a hamper on the stock market because the entire world invests in the stock market stateside. So when there's an election getting ready to happen, there is uncertainty in the market, and investors, hedge funds, no one really likes uncertainty. The market does not like uncertainty. So because of this, stocks are still not moving where they will likely to move after the election. Just think about it like this. CPI data, PMI data on manufacturing and services coming out this week, first week of October, and the same in November. If both of those are good, once the election's over, there's going to be a pretty good bull run. In fact, there is an upside of 10 to 12% between now and January. You match that with the stimulus going on in China, and you can see how this is a recipe for a pretty good run. And then on top of that, you add in the fact that the shorts might have to cover, and most likely will have to cover, especially if we keep buying NIO and we can keep the price above $6.50 or $7. So if the price of NIO stays stable and continues to go up, good data here, good data in China, overall no geopolitical issues that arise or get any worse than they are now, or in fact even better, they kind of die down and take a back step and improve. So think of it like this. Geopolitical issues don't get any worse. They take a step forward, maybe even get better. Check. The stimulus in China continues. Maybe they cut rates again. Check. The rates get cut here stateside yet again before the end of the year. Check. PMI data in the United States for the first week of October, which is this week, and the first week of November and December are also good. Check. You compile all this together, and it's a pretty bullish case for small cap stocks, especially like NIO and SoFi. And the fact that the shorts in NIO might have to cover over the next 4 to 6 weeks as we approach election. With all of this combined, it's a pretty bullish situation for NIO. And I've been explaining this to you guys for a long time that NIO is a really strong stock, but the Chinese economy has been suffering. NIO was at a much higher price a few years ago in 2021 and 2022. The last 2 years has been pretty rough on China with a $6 trillion loss over the past 2 to 3 years. And also the fact that Chinese stocks and Chinese companies have about 20% of their market cap in cash, in available cash, which is really something to think about because this is also another metric that's directly affecting stock price and the short interest. So here you can see NIO. And if we look back on NIO a few years, before all of the issues in China, you can see 2024 has been bad. Even 2023 wasn't that great, although was a lot better than 2024 thus far. If we go back to 2022, before all the crashing in the market happened and everything started working its way down, especially on Chinese stocks, we can see that NIO was around $31. I expect NIO to approach $10, maybe $12 by spring. Now, there is a much more bullish scenario, and that's if things start to run and the shorts have to cover, then we could see ourselves in a predicament where it's all good and green. We can see that right here. There's a big gap on the 4-hour candle and the daily candle, but it sold off pretty quickly. And this is because the shorts, maybe some of them had to cover. I don't know what percentage of shorts would have covered on this. I would assume some, but there's been a lot of people taking profits. For example, everyone who got in up here and purchased and the stock came down, they waited for the stock price to get back up here to break even and sold out. Now they are out. The stock is dropping and more investors are going to keep buying it. And as long as the people that were buying down here keep buying to push it up, we have to go against that grain of everyone who purchased up here and the stock dropped. Once it gets back up, they're all going to want to sell. There's a lot of selling pressure in here. And if it gets pushed through here, the shorts will probably start covering around $9 or $10. If we can push through to around $9, I believe there'll be a lot of covering going on, a lot. But it's really going to depend on what happens with the Chinese economy. I have a price target, like I said, right around $10, maybe even $12 by New Year or spring. Ultimately, in the next 12 to 18 months, we could see NIO back up to $15 to $20. They are selling a lot of cars in China. In fact, they're doing a lot better in China than Rivian is doing here. So we should relatively see a decent growth on the price. And if we look at Rivian, they have a market cap of 11.3 billion. NIO's market cap is 11.94. Shares float 192, and on Rivian we have 730 million. So double the shares float of NIO, similar market cap, meaning realistically NIO should be half of what Rivian is, just off of a rough estimate. And it's exactly what we're looking at. So NIO is sitting at half of Rivian. However, they have a much better price to sales. If we divide the market cap, 12 billion, just about 12 billion, and we divide that by the revenue over 12 months, 8.78 billion, well, then we're getting a very good price to sales. Let me show you how this works. 8.78, and we divide this into 12. Now, remember, the market cap has increased due to the price and everything has changed over the last couple of days, just a small amount, but 11.94 billion divided by 878 billion. We have a 1.3 price to sales, and that is very, very good. Apple's is over 9. So this shows you how strong they are. However, Rivian has 5 billion and a market cap of 11.31. So if we do 11.31 billion and divide that by 501 billion, price to sales of 225. Still very good price to sales, but almost double NIO's. NIO also has slightly better earnings, I believe, at least up until recently. Yes, much better earnings, significantly better. And they sell more vehicles. So when we sit here and think about it, it's not far off based on price to sales and overall sales in China and how well NIO is doing, that we should see NIO somewhere in the $9 to $10 range. That's my estimate, just based off of where Rivian is and where NIO is right now, based off their sales in their respective countries, their revenue, their total revenue, price to sales, just overall market cap, shares float. NIO really realistically should be around $8 to $9 minimum. So let's just see what happens. But right now is definitely a buy. Under $7, no brainer. I had 1,000 shares of NIO that I got into at $4.40, but like 4 or 5 months ago, I got out at $5.50, which was like almost $1.20 profit, $1.10 profit, something like that. And that was good, but I should have held longer. Now I'm going to be looking to get back in. If NIO falls closer to $6, or at least to $6.50, I'm going to look to start adding NIO yet again. And this is definitely a good time, in my opinion, because I think under 7's good, under $6.50 is even better. And once you get closer to 6, it's pretty much no brainer. NIO might not even fall back to that point. It just might not happen. Based on the price and all of this resistance here, everybody that purchased right around here is going to hold. And all the people that sold right here and bought down here are going to keep holding. The only people that are going to sell in this area area are the people that bought it down around 490 and the stock price comes back down. They might be maybe induced into selling because the price is dropping, but there's a lot of resistance here. There really is. What we're looking at right now is most the investors that are selling are investors that purchased in this area and are trying to break even. So as long as the buyers from down here keep adding, it should sit where it's at right now. I would add to NIO. Let me show you guys what I would do. I would personally buy the shares, but if you must, I would go out 24 days to the end of the month and I would sell 650 puts for $63. This is incredible premium for NIO, and I will just sell 10 of these because I'll take 1,000 shares of NIO any day. And this is a good way to make $630. And this is 11% return in 3 weeks. This is very strong. Delta is 40, which is a little on the aggressive side, even for cash secured puts. You could sell a $6 put, which is much safer. And if I was to sell 10 of these and try to get maybe 39 for this is 300. This is about 6% in 3 weeks, which is about 7.5% in a month, which is still very good. And it's a lot safer. I might sell 5 $6 puts and 5 $6.50 puts. But I would say this is the time to get into NIO. NIO is very strong right now with the economy, getting a stimulus from the Chinese government. So definitely would recommend thinking about adding NIO now, and especially by selling puts, but you could miss it. NIO decides to run when you sell these puts, you could miss the move. If you guys are having trouble understanding the delta that I just talked about, or maybe you're just not really understanding the reason for selling puts, if you're a beginner in the market, or maybe you've been trading a while and just don't understand. So I just want to take a break from talking about all this stuff. Look, I know this is really confusing, but if you guys really take your financial freedom seriously and you want to get better in the market, whether you're a beginner or intermediate and you're just kind of lost and don't understand all of this, I would love to teach you all of my tips and strategies to help you become a better trader and take control of your financial freedom. You guys can sign up for my full Discord training course and one-on-one coaching at any time. But like I said, it's a very serious mentorship. You have to be prepared and show up ready to learn, and I will show up ready to teach you how to grow your wealth and your financial freedom. You can sign up at any time at investwithcorey.com right there on the screen. The link is in the information box below. I have students with small portfolios that started with $8,000 and they've turned it into $18,000 in 3 months. Other students with $300,000 portfolios, they turned that into $400,000 in 2 months. This sounds like something you guys are interested in. I would love to help you, fam. I'm driven every single day to teach and help as many people as I possibly can. So I hope to see you guys when you're ready. So guys, NIO, I believe, is a really strong buy. It's a small cap stock, EV sector. They're doing well in China. China just got a stimulus. You heard what Tom Lee said. This is a really good long-term play now. I feel bad for everyone that got in much earlier, but right now it's very strong, but only time will tell what really goes on with the Chinese stimulus and their economy, as well as ours, and how the stock market plays out with NIO over the next few months. Thanks guys for being here. I really appreciate you. We'll see you on the next one.